Good afternoon, George Cavaligos for HFT Bonds and Notes. Not much here today. It was all last night, fireworks. Last night, weakness in the Asian market, the Asian bond markets. The G7 didn't tell Japan to stop QE. Wall Street Journal article that was rumored early or middle part of last week finally came out Friday, late in the afternoon. Said the Fed's looking at ways to get the markets ready for their tapering of QE. That's going to be a long process. Well, not much happening today really, unfortunately. After the big moves last night and the rebound in the treasuries, the market didn't do much here. We had a couple little moves early. Just hovering near the lows, consolidating near the lows, I guess is the way to look at it. A lot of interesting things to look at on the calendar though. The Fed buying tomorrow and Wednesday in the 10-year sector. Some chunky little buys there. A small bond buyback on Thursday and a big 5-year buyback on Friday. I tried to add it up. It's roughly $20 billion the Fed's buying this week. There's no auctions except for T-bills. I think there might be a TIPS auction Thursday, but who cares about that? And I think there's a big coupon payment too, May 15th. So there's going to be a lot of cash sloshing around out there. Where's that cash going to go? Equities up near the highs, bonds and notes near the lows. I guess it's going to go in equities. But we could see a little spill over into the treasuries here. Tomorrow, we don't have much news here in the States, but there's a lot of data coming out of Europe tomorrow morning fairly early. Let's see how that goes. I'd like to try and buy a dip real early tomorrow morning in the treasuries, thinking that the buybacks will kind of lift the treasury markets a little bit, with the caveat that we don't take out last night's lows by very much, or that if we do, that we do the throwover trade again that we talked about last week, where the market breaks that low and then comes back. You had to watch that, okay? The trick was in there on the bonds on Friday, because remember, the bonds had came back, broke back above the previous low. The 10-year didn't. Kind of warning sign there, right? Remember, we have to watch both 10s and 30s to see if they're confirming each other. The 10-year never got back above its old lows. The bonds ended up breaking up another 6-8 ticks above the old lows, but then it came right back down through the previous lows as the 10-year sort of failed. So we'll have to see. I want to buy a dip. I don't know why. I think it's just a kind of Fed's buying a lot. I'll buy some before them and sell it to them in the buyback is my plan. So that's kind of what I'm looking at. I don't have a great count again right now. The one thing I will point out, and if you guys are following me on Twitter at GCavaligos, you saw it last night, and I want to thank Bob at Fade Trader. He pointed it out even earlier than that, before I did. That 132.23 level, saying that? No, 131.23 level in the 10-year was a very important support level. If you look at the symmetry off the highs, 131.23 plus was equal swings, C equals A off the highs on the 10-year. The bonds didn't quite get there. 143.23 was equal swings for the bonds, so that's where their symmetry lies. Maybe we have a chance to see that at some point here. The rest of the markets that we've sort of been trading off of haven't confirmed any kind of reversals yet. My trying to buy them down here is kind of, a riskier trade. It's bottom fishing. You know what happens when you pick your bottoms, right? So keep a good tight stop on it. That's it. I don't have much to add. I hope we don't get another big move tonight, and I hope we get some big moves during the day. That's my hope for everybody, and I'll see you guys tomorrow morning in the email.